Hello guys and welcome to Daily Market Movements. Welcome to another episode of Indices Watch. In today's video we're going to be having a quick look at the S&P 500 and the Nasdaq 100. But just before I start today's video, I just want to make you all aware that today at 1 p.m, that's UK time, so in approximately 3 hours time, I'm going to be going live on YouTube. And in that video, I'm going to be analyzing several key markets in depth. We're going to be looking at the crypto markets. We're going to be looking at the likes of gold and WTI crude oil. We're going to be looking at the indices in more depth, and then of course we're going to be heading over to the US stock market, and I'm going to share with you several stocks that I'm looking at this moment in time. This is going to be a completely free video, so if you are a subscriber or if you've just come across my channel for the very first time, make sure that you do join that video, and it will give you the opportunity to ask me questions as well, which I'll be willing to answer as we go forward. So any questions that you have with regards to any certain markets, please tune in for that stream, and I'm going to try my best to help answer those questions. Or if you have any other questions about brokers or trading in general, then this live stream at 1 p.m. UK time is going to be the perfect opportunity for you to ask those questions and for me to answer them. But let's just have a quick look at the S&P 500 and the Nasdaq 100. I'm just going to briefly go over this because during our live stream today, that's where I'm going to go into it in more depth. So S&P 500 achieved a brand new all-time high yesterday. I think it was up at around 4,800. We didn't get that record close because we ended the session near the session lows, but today we are in the green as we talk. Of course, the market's still open in about 4.5 hours time, so anything could happen, but at this moment in time we are looking green, which is fantastic. I really like the S&P 500 here. I wouldn't personally open a trade around these levels, but I do like the fact that we are bullish, and that we are trading up at those all-time highs. But what I would like to see is for us to rally a little bit higher, perhaps towards 4,900, and then eventually have a hefty pullback. At this moment in time, we have something called the Santa Claus rally. This typically goes through until the 2nd of January. Especially the 1st and 2nd of January, I do expect the markets to be bullish because you get a lot of hedge funds and banks, big market movers, those individuals or organizations who have large pockets. They will go and reopen trades as we go into the new year of 2022. So, beginning of every month is typically bullish, but especially January. So it'll be very interesting to see how the indices react as we go into the new trading year. But as I mentioned, I would like to, trade up towards 4,900, and that gives me the opportunity to pull a Fibonacci retracement, and it kind of gives us targets of where we could potentially be heading. But more so, the 50-day EMA is an area where I would be looking to buy, the S&P 500. So let's just draw up a little chart here. Let's just copy these bars in. So let's say if we continued our upside movement and we traded up towards 4,900, then what I would be looking for is that pullback down towards a 50-day EMA. Now that would be a fantastic dip. Percentage-wise, that would represent roughly 4%. And that's an area where you could then trade it back up towards those all-time highs up at around 4,900, which of course offers you around 4.5%. So the S&P 500, I do like it very much. It's very bullish. I think everyone can see that. But at these high levels, I'm not really interested in getting involved because the risk-reward ratio is just not there. We could easily fall back down towards a 50-day EMA, and that represents a 3.31% decline from current levels. But on the flip side, we could easily go to 4,800, and that's only a 2.5%. So if I was buying here, I'd be risking 3.5% to gain 2.5%. That doesn't interest me at all. What I'm more interested in is buying down at the 50-day EMA to target that 4,900 area, which would be a 5.8% gain, where I would probably only risk around 2.5. So that's a fantastic 2-for-1 risk reward ratio. It's all about your risk management, guys. Many retail traders will be jumping in at these high levels, and that is why the majority of retail traders lose money. And that's why I've created this YouTube channel, to create awareness for those who are new to trading and try and help you guys avoid these mistakes. Now, you might be watching this video thinking, who does Max think he is? He thinks that he knows all. And the answer is, I do not have a crystal ball and I do not know it all. I make mistakes all the time. But as a trader, this used to be me. There's nothing wrong with it. We all do it. We see, indices or stocks, whatever you're trading, go up and up and up and up, and then the likelihood is the day that you get in will be the first down day that it has in over a certain amount of time, and you're just thinking, bloody hell, that's just typical, isn't it? But it happens to us all, and there's nothing wrong with it. You just need to learn from these mistakes. If you have started trading in the past month or so and you blew up your trading account, whether that be $100, $1,000, $10,000. I've heard it all. Okay, I've known people who never even traded before, and they've decided to put their life savings, whether it be 50 or 100k, in, and they've lost it within a week. It happens. Okay, and there's nothing wrong with it, unless as long as you learn from those errors going forward. So, when you do lose a large sum of money, if you do blow up your trading accounts, don't just see it as losing money, see it as you've just paid for that lesson. And providing that you do not make that same mistake again, then that is progress. And that's what trading is all about. It's all about learning from your errors and making progress. So S&P 500, what I'm just trying to say here is do not be going chasing these highs up here. Don't give in to FOMO. Wait for that pullback. Many investors think, oh, it will never happen. Look at the S&P 500, but it does. It still has pullbacks from time to time. We saw it here not so long ago, back in September. We had a nice 6.6% pullback. We even saw it here a few weeks ago, back in mid-November. We had a nice 5.5% pullback, and it will likely happen within the next couple of weeks here for the S&P 500 as well. Moving over to the Nasdaq 100. Nasdaq 100 looks very bullish. We've bounced off that 50-day EMA, and I fully anticipate for this market to go and achieve all-time highs. As you can see, we are lagging the S&P 500. The S&P 500 has been the best performing index in 2021, with the Nasdaq 100 in second place, and the Dow Jones 30 lagging both the S&P 500 and the Nasdaq 100. But as you can see, the S&P 500 is trading up at all-time highs. The Nasdaq 100 isn't yet. The previous all-time high was set at around 16,760 here for the Nasdaq 100. So in the next couple of trading sessions, I fully anticipate the Nasdaq 100 to see a nice rally where we could gain, approximately 2%, which would be great to see. But just like the S&P 500, guys, I'm not interested in getting in at these high levels. Luckily for myself, I actually got in around the 50-day EMA, and I still do hold the buy position. But if you're watching this video now thinking, well, fantastic, if Max holds a buy trade, then maybe I should buy too. And the answer to that is no, because you're too late. This time around, you are too late. Again, we could go up towards 17,000. That represents a 2.8% gain towards the upside, but to the 50-day EMA, you're talking around 4%. The risk-reward ratio just isn't there for the Nasdaq 100. Again, just like the S&P 500, you want to wait for that pullback to the 50-day EMA, and then that's where you could potentially open a buy trade like I have done over the past week or so. Target up towards 17,000, which represents a 6.5% gain from current levels, and you could only be risking, if you put your stop loss below the lows, 3.5%. So again, that's another 2-for-1 risk-reward ratio. The risk-reward is so important if you wish to become a successful trader. Once you conquer a good risk-reward strategy, that's when you will see massive improvements in your trading accounts. Now, you're probably thinking, well, how can I copy Max and get in at the right moments? And there's a perfect opportunity. I would highly recommend that you join our streaming service. That's where I post more in-depth daily videos with regards to the top key markets. I have them on the top of my screen here. We have gold, crude oil, Nasdaq, S&P 500, several US stocks, crypto markets. And as well as that, once you do subscribe to the streaming service for a very small fee of $19.99, it's the same cost as your Netflix subscription. Well, then you will also get emailed a private link where you can then join our Telegram group chat. And that's where, of course, we post the signals as well. So I'm going to leave a small clip at the end of this video explaining how you can become part of that team. But if you're not interested in that, then of course, please do tune in at 1 p.m. UK time, guys, where we will be doing that live stream where I go and analyze all these markets in depth. It's great opportunity, as I mentioned before, for you to ask me questions. And if there's anything else that I can potentially help you with, I'll be more than happy to help. So thank you for watching today's video, and do not forget the live stream. And that is going to wrap it up for today's video. But just before I let you leave, I just want to quickly show you our brand new streaming service. We've recently launched this website that you can see in front of you. This is where we provide in-depth analysis videos as well as trading signals via our Telegram group chat. How it works is really simple. We have two subscription plans. First one is a monthly fee of $19.99, and the second plan is only $209.99 for a year's subscription. Once subscribed, you'll then have access to all of our in-depth analysis videos as well as access to our private Telegram group chat. We cover various markets such as commodities, US stocks, indices, and cryptocurrencies. We also have a video category where we provide educational content so that you can improve your trading skills. If this sounds appealing to you, then you can find our website link in the description of this YouTube video at dailymarketmovements.com. If not, then I would just like to take this time to say thank you for watching today's YouTube video. Please give my channel a subscribe and give this video a thumbs up. Thank you very much, and I hope to see you again soon.